Um, let's just leave that up there. So I think Bitcoin's gonna roll over here. Now I did say these targets a while ago, but as is the case with trading, things can change, and as you get new price information, you need to start changing your opinions and where things may or may not go. So that's just the case with trading. Okay, take it from myself. I've lost a lot of money in the past with arrogance and ego and marrying a trade, and you can't do that in this game. If you want to have a lot of those qualities, then unfortunately trading's not for you, and you need to stick to the hamster wheel and work for someone, because either you're an entrepreneur or you're working for one. Simple as that. So you need to be flexible in this game. As I've said, what concerns me on the daily is this continued divergence here. I mean, we're really getting a lot of divergence here. We're getting newer highs and we're getting some divergence. And this trend line is it's gonna hit this at around 8,200 something. Then it's gonna come back down. So those targets were from before, but things change. Maybe it'll break out of here. Might still hit 9,000. I'm not sure. I did bring those targets down a lot from 13,000. They were well out of sync. Um, Thought we were going to get an extended wave 5 and wave 3, but we're not. So this looks as though it's the top of wave 3 right here. So we're going to come down to make a wave 4. So as I said, you need to be flexible in this game. Trading is not about being right. It's about analyzing the price targets and taking the highest probable trade. Okay, so let me just pop that in big letters. Okay, for highest probable trade. Okay, you can never be 100%, but in this game with technical analysis, you can be well over 80, 85, 90%, and therefore at that percentage, you don't have to be right every time. Okay, you can be right only 4 times out of 10 and still make money in the long term. There should only ever be 3 outcomes to any trade that you do: a big win, sorry, a big gain, a small gain, or a small loss. There should never be large losses, and my Elliott wave tutorial will help to explain that. So very quickly, I don't want to spend too long on this, but 1, 2, 3, 4, ABC expanded flat. Now it's going to go up in 5 waves, probably make a new high, and this is the hourly. I don't like the hourly. I like the 4 hourly. This is the hourly. So diminishing volume here, poor bullish volume. I mean, it could just roll over at any time here, but I've got it making up a new little high here, maybe 8,200 something. I think yesterday I worked out a target of 8,200. It's going to hit that line, and it's going to come back down. But poor volume here. There's just no follow through as well. I mean, it's getting really weak. You're getting divergence here on the 4 hourly. That's starting to roll over as well. Okay. Now, as I said, I'm going to start doing some trading videos. I don't want you guys just to listen to what I say. I want you guys to actually learn something. So let's go into JNUG. Okay. Now, I want to just go over volume in this video. So today we're going to just talk about why does that always come up? What's going on here? Because we spent a lot of money, spent a lot of time talking about volume, but let's not forget about VSA. So that's volume spread analysis. Okay, and this was all uncovered by a chap called Wyckoff. So I'm a student of Wyckoff, as I am of Elliott. Let me just write the other two. The other one is Dow and Gann. Okay, so these were the 4 henchmen of the apocalypse back in the day, and these were the 4 dons. Okay, I use these two mainly. Gann, I've done some work on Gann, and basically Gann to summarize this: if a price retraces 50%, you buy. That's basically Gann in a nutshell. And Dow came up with the Dow theory. Okay, which is interesting theory. So these are the 4 dons from back in the day, the 4 horsemen. So as I said, if you learn Wyckoff's analysis, Wyckoff's way of trading, Elliott, that is going to make you a lot of money. Okay, and if you want to, you go over Dow, go over Gann. But if you had to choose 2 books to learn, it's Wyckoff and it's Elliott. Okay, and I'll leave the links for the Amazon links in the description down below. So please do click on that, go onto Amazon and find the 2 books on Ralph Elliott and Wyckoff. Okay, and if you wanted to, you can go over Dow theory if you get the time and Gann. So let's just go over. Let's try to analyze JNUG from a Elliott and Wyckoff perspective. Okay, so sometimes it can be difficult to analyze leveraged ETFs, but essentially you've got 1, 2, 3, 4, 5 down, yeah. So that's now the bottom, and our JNUG is going to pop like a bastard. Now, The question is, if you bought in here, was that the time to get in, and was that a long? Now, for various reasons, this was not the bottom. Okay, first of all, in no way, shape, or form does this look impulsive. This is clearly a corrective pattern. So even if you knew nothing about volume, just simple Elliott wave would have told you that. I mean, that's a 1, that's a 2, that's an A, that's a B, C. There's no way that's impulsive. Okay, this looks very impulsive, and this is the start of a chain of trend, which will probably go, well, the next support's here, isn't it? So 17.5, which doesn't sound like a lot, but in terms of percentage, you're making a good 10, 20%. But I want to analyze this from a VSA perspective, okay? And I want to show you how Elliott and Vyckoff together can cause you to make a lot of money. Now, we spoke about buying climaxes before, and essentially here, as it comes down, we get panic selling, panic selling, panic selling, then we have a boom. We get this massive selling climax where it's got really high volume and it just dumps completely. And that essentially sets your range, sets your horizontal ranges. So what you want to do is grab this, that's your bottom range, and that's based on this heavy selling climax. It doesn't have to be just the one candle, could be a collection of candles, but generally speaking, you'd get selling, 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 boom, it'll just go vertical, right? After the selling climax, you get an automatic rally, an AR, and as you can see, immediately it jumps up, and that then sets the boundary there, okay? So Wyckoff says this is a, why does it do that? I don't know why it does that. Maybe I have to make a new text box. Anchored text. Okay, I don't know why it's doing that, to be honest, but maybe it's because I need to I mean, I've already spoken about this, so right, okay, so that right there is your selling climax. Okay, now it's copy, paste. That right here is your AR, that's your automatic rally. Okay, now essentially, what you could probably label this as well if you like, visibility. So that's your upper range, yeah, and this is your lower range. So what Wyckoff said is the selling climax followed by the automatic rally. Generally speaking, it will produce your ranges, okay, and then price will then stay in between this range in this accumulation zone, and then slowly it'll, all the sellers, all the weak hands will sort of sell. The large interest, the big corporations, hedge funds, they'll slowly undercover buy, and then once all the supply has been exhausted, they've got all the shares, they'll then start the markup of the price. Okay, but essentially that's what it is. Okay, now this automatic rally isn't always precise, but sometimes there can be another line above this, which is a bit of a resistance line. So we can draw that probably there. Okay, so let's not call that upper range. That's just the resistance. Okay, right. So you have selling climax here. You've got the automatic rally, which, I mean, I've got it up here, but that's essentially labeling the right there. Then you've got this as the upper resistance, and then you've got here as a lower resistance. Now, what I want to show you is if you had bought in here, you should never buy in on the selling climax. You should wait and see how price responds following that level. Occasionally, you're right though, a massive selling climax could very well be the start of a new trend. So there's no harm in putting at least 50% of your position down here. But generally speaking, that's just the start, and that sets out your two ranges. Then price will stay in between this range. It might pop up above here, but right here you've got terrible volume here. Like none of this is impulsive, high volume candles. These are just really low, shitty little candles that aren't really going anywhere. So these are just really traps to then get more people to sell. Okay, and generally that's what trading. I mean, that's what the stock does. It just goes sideways. Now, What's really interesting is if you break it down even more, what happens, inevitably the price comes back to retest this low. Let's say there was a huge buyer here. Let's call him John. Huge buyer John. What needs to happen is John, the big buyer, needs price to come back down to here to check, are there any more sellers here? Because what the big hedge funds and corporations, or the composite traders, as Wyckoff used to call them, what he doesn't want is for to mark the price up and then suddenly get a lot of sellers come in, and then he's going to be caught with his pants down. So what he needs to do is bring price down here. Now, some people call it a shakeout. Wyckoff called it a spring. You can call it what you like, but it needs to go down here. And let's be honest, any dumb person would leave their stop right here. And so they're very sneaky. What they do, they mark the price down purposefully to trigger all the stops, and they want to test for supply. Supply means sellers. Are there any sellers down here? Is there anyone doing business on the short side down here? As I've said to you guys before, you need to think, where does price need to go to shake people out, one way or the other, either to the upside or the bottom side. And that's what we have here. We actually have very dodgy, low volume, no supply candles. That's what they're called, okay? And this candle here on the 2 hourly, this candle right here on the 14th at 8:30 UK time was a no supply candle. This is where the big institutions mark the price down to test, are there any sellers here, okay? And they do it as a low volume test. And this test was well, it wasn't confirmed initially, but later on it was confirmed, and we'll get onto that, okay? But do you see how here it's less than the 2 candles before that? And that's what's called a no supply candle. The opposite is a no demand candle on a top of a bull trend, but this is the bottom of a bearish trend. But the volume of a no supply candle is usually as a doji, the spread is very tight, i.e. the difference between the open and the close, and it's usually lower than the previous 2 candles, okay? And this is a great place to go long once you see it confirmed. Now, what happened straight after? It did not get confirmed, okay? Now, confirmation, you need a break above, a close above the high here. So there were still some sellers here. There wasn't sellers at this price. Then they've probably gone in to mark the price up. They've retested it down, and then suddenly more sellers have come in. But as you can see, as those sellers came in, they didn't stay there for too long. They got bought up by the composites, by the large hedge funds. They immediately bought it up, and that is a high volume hammer candle. Okay, so sometimes that happens. On other times, this no supply candle immediately gets confirmed, i.e. a close above the high here, in which case that's your target to go in long. And if you bought in here, you would have made a good 10% on your money right from here. So Wyckoff is unbelievable at figuring out on a real minor scale. You could time your entry literally to the cent if you know how to read candles right. And this is what they call form trading. You guys need to get good at reading candles and reading volume and analyzing things, okay? And when used together with Elliott, it's powerful, because no way does that look impulsive, okay? That just does not look impulsive. So that means that must be a wave 4, and here you can count 5 waves down. 1 2 1 2 3 4 3 4 5, okay? 1 2 3 4 5, done. So if you were to combine Elliott and Wyckoff with volume, you know that's the end of wave 5. So you could potentially have got in here, but you'd rather analyze a bit of volume too. And on an Elliott level, this was probably the start of the impulse. I reckon this was the initial stages 1 2 1 2 3, okay? But that's the Elliott side of things. So when used together, these two concepts are very, very powerful. And as I said, that was a good time to buy. But it's these little candles that are the candles that you want to look for. These really low volume, less than the 2 candles before. They mark the price below the bottom of the selling climax, below the SC. You can call it a shakeout. They need to take out all of the stops, all of the sellers. Anyone doing business on the short side, they have to take those out. Now, Didn't get confirmed initially. They marked the price back down. Suddenly, loads of sellers came in, but the composite traders bought all of their shares and they marked it back up, back into this trading range. Okay, then we've got a low volume, and essentially, this was your confirmation. This candle here was the confirmation because this candle has closed above this high. If you wanted to be extra safe, you could wait for a confirmation of this entire hammer candle, which was this candle here. And that happened at 8:30 on the 15th. So, you know, these are 2 hour candles. So in the space of 1, 2, 3, 4, 5, space of about 4 or 5 hours, well, maybe 6 or 7 hours, you've got time to then buy in, okay? Then the price goes up. As you can see, it retests this line. But the buyers are coming in. They're not letting the price touch this selling climax line again. And then slowly, it goes up, boom, it's gone. It's gone now, it's gone. And what's going to happen on JNUG is it's going to hit the top part of this range and then correct, and then it's going to bust out of the range at really high volume, or it's going to hit the resistance, then test this range, make sure this automatic rally is then support, and then it's going to go up. But either way, JNUG is a really good buy right now. As I always say though, please trade on your own volition. This is purely just my own opinion, but JNUG is a very good buy. JNUG is a good buy, and it all sets off from this candle. And then once you bring in Elliott as well, you've got confirmation on so many levels. I mean, you've got 1, 2, 1, 2. That's a little triangle right there, and then boom, it's up in a wave 3. So out of these 4 horsemen, as they call them, okay, if you were to only learn about Wyckoff and Elliott, and most of 90% of what I do is based on these two guys, you'll learn a hell of a lot, and honestly, your profitability will go up massively. And if you get the time, read up about GAN if you wanted to, and the Dow theory. But frankly, these two people have changed my life in terms of making money on trading, and that's essentially what it is. This is just pure accumulation. And then if you want to bring in some divergence, I mean, look at this. This is just textbook divergence. Okay, so let's get this bad boy out of the way, this bad boy out of the way. Let's analyze this in terms of divergence. So very, very simple. Price makes a sneaky newer low, and there's divergence here. So RSI is going up, price is going down. So, and then if you wanted extra confirmation, okay, MACD is going up. Okay, so on this level it's going up, this level is going up. Volume we've analyzed. Elliott wave, we now believe that this looks like an impulsive wave. So there's about 8 or 9 different reasons. Well, maybe not 8 or 9, but let's say we get 1 mark for divergence, 1 mark for MACD, 1 mark for volume, 1 mark for Elliott. We're at 4 here, and let's say, you know, we're looking, I mean, this is just sort of arbitrary figures, but essentially you want to tick box as many things as you can that help you to confirm the trade. I use the oscillators just to confirm what I'm reading, okay? I've only used the oscillators just to help show you that if you wanted that extra confirmation to get into this trade, you could use that. And frankly, JNUG is a very good long for so many reasons. I mean, gold's popping, dollar's going to collapse to 88. It's all set in stone. And these kind of trades, you have to be patient for them, okay? The stock market, as a wise man said, is simply a means to, what did he say? To transfer money from the impatient to the patient, okay? Once again, all these quotes that I'm giving you, this is purely from reading. So I said, knowledge is power, okay? And that's all it is. That's all it is. That's all the stock market is. I don't care if it's Bitcoin, dollar, JNUG, you know, oil. That's all it is. Impatient to the patient, okay? And you know, you've got to hold it. You've got to look at the charts. You've got to analyze volume, and sometimes you don't get it right. But if you were patient, even if you had bought in here and you knew they were going to do a fake test, you could just widen your stop or not have a stop altogether. There are many times I don't even trade with a stop because I know what games they're going to play, and I'm so confident in the trade. You could have added into your position here, and now JNO's going to go up. So if you're trading it, investing it, you're swing trading it, anywhere here is a good place to buy, and your stop should now be below here, 14.35. Okay, so it's 1.2 divided by 15. So stock market's obviously not open today, but 7.7%. Even if you were to buy here, your stop is 7.7%. But I reckon, as a bare minimum, JNUG's going to go up to, let's say you buy here, what would that be? There, 11.2, so you're getting a 1 to 6 risk reward. Yeah, that's not bad. Maybe it'll go up as high as 20, in which case you're getting 31%. There's days when I've traded JNUG and the next day, you wake up the next day and it's gone up a ridiculous amount of percent because it's triple leveraged. And what I think is going to happen is JNUG's going to keep on going, as well as gold. Dollar's going to go inverse, and then before this week's going to go up, this week's going to, and then this week we're going to see a lot of volatility. Okay, as I said, with Bitcoin and everything else, a lot of things are going to happen. But I reckon for the next 3 weeks, Bitcoin's going to come down, dollars DXY is coming down, gold is going up, and JNUG's going up. So, but anyway, those are just my own opinions. Trade as you as you like. But that's just the first sort of set of videos that I wanted to do, and I thought JNUG was a perfect sort of way to show accumulation. And so I would urge you guys to have a look at Wyckoff, mix in a bit of Elliott, and honestly guys, you're going to make a lot of money. You're going to make a lot of money. And this little candle here, I mean, this is so sneaky. It's just so sneaky right here. Okay, and less than the 2 candles before, such a sneaky candle, and all it's doing is testing the sellers. Okay, as Wyckoff said, the stock market is simply supply and demand. Okay, you know, it's similar to property, you know, grocery prices, car prices, whatever, anything. It's just an auction. That's all it is. It's just an auction between buyers and sellers, bulls and bears, and they're trying to figure out at what price can I shake out the bears on the short side, and at what price high up can I shake out the bulls. And that's all it is. It's just the way of, it's fascinating actually how so much psychology plays a part in this game. But all it is, on a fundamental basic level, is simply supply and demand, and that's all it is. And if you get good at candle reading and, you know, form reading, honestly guys, your profitability will go up through the roof. And that's all there is. There should only ever, any trade that you do from now on, should only ever be 3 outcomes: big gain, small gain, and small loss. Okay, you should never have a big loss. Okay, if you're using tight stops. Okay, as I said, I'm a very high risk trader myself. Okay, I'm extremely high risk. I won't share with you some of the risks that I've taken, but I'm extremely high risk. So many times I have so much confidence in what I'm doing that I don't use any stops. But for you guys, I would urge you guys to use stops. But these 3 there should only ever be 3 outcomes to any trade that you do. This should never happen. If you're using Elliott, and we'll get onto that, if you're using Wyckoff, if you're analyzing volume and add in a bit of oscillators, I mean, you guys can choose stochastic, RSI, stochastics, there's the AD line, there's CHI, CCH, all kinds of other crap. These 2 are the best, to be honest, but you know, I don't use those other ones. There's a guy on YouTube really into his clouds, likes his clouds. I don't use clouds. They're all bollocks. Okay, volume is the most leading price indicator that you can have. Okay, but this bottom line, this should never happen. This should never happen. Okay, and if you're trading correct using Elliott, Wyckoff, volume, and these oscillators, you can easily get out of a trade when you've called it wrong. Okay, so this is the first sort of off the cuff video I'm doing on trading. I saw this JNUG setup last night. As I said, I mean, I'm quite limited with my job in terms of analyzing this, because you have to be ready for this. But it's this candle. That's all it is. That was your way in. Okay, didn't immediately confirm, but this candle did, and if you wanted to be extra safe, you buy in on a test of this candle, and then once it's retested this, there's no way JNUG has any business going anywhere near here again, because the big hedge funds, the composite traders have absorbed all the selling, all the supply, and now it's just going to go up. There will be very low volume red candles here. Okay, this you might think is low volume, but as you can see, it's less than the candles here, and JNUG's going to just do this, piss about, he'd maybe do that, then do this, and then boom, it's gone, and you're not going to see it again. And the minimum it's going to go to is, as I said, it's going to go 17 here. And on a trade like this, personally, I don't even use a stop loss because I'm so convinced by it. I've seen this set up so many times. But anyway, hope you guys like that video. I want to do more trading videos. I don't want you guys just to take my tips and go into the market. I want you guys to actually learn. Okay, don't make the same mistakes I made. I used to use Financial Times. I used to watch Bloomberg, CNBC. Then I realized after 7-8 years it's all bollocks. Okay, and as a great trader, Jesse Livermore once said, it takes 5 years to understand the market. It took me 7.5 years, so hopefully take you guys a lot sooner. I will be looking to do live stream videos, webinars, as well as seminars in the near future around Easter time in the UK, and hopefully if that's something that you guys would like, please let me know in the comments. And I've got 2 links to Amazon UK, Amazon US. Please do use those links and have a look. And as I said, it's these two, these 4 horsemen, and if you get the time, cover these two. But 100%, you need to know about Wyckoff and you need to know about Elliot, and find books on Amazon. Use my links, and as I said, famous quote, I'll just leave that up there for you guys. The stock market is a means to transfer money from the impatient to the patient, and those who are patient make money. Okay, hope you guys enjoyed that video. A little bit different to what we usually do. Please like, please share, please subscribe. Let me know what you think. If this is something that you wanted me to do more of, and I'll catch you guys on the next video. Thank you.